Well, ladies and gentlemen, first things first, I have a wonderful headache. It's actually battering my eyes. So if you see me during the live and I'm like this, because I've got this amazing selfie light in front of me. So it's not because I'm about to fall asleep. But anyways, what's going on? The market. Oh, NASDAQ's decided to wake up. Seems like the sell button's working a little bit, or how long for? Different story. Well, ladies and gentlemen, we've got something really important happening, okay? First things first, today's topic is about the market makers and their positioning in options, which is going to have a huge impact on Bitcoin. Why? And I'm going to be talking about two price points, the 111 and the 100K mark. And this is where we need to really monitor if Bitcoin is being primed to go down, to come up. We need to focus on these certain areas in the chart to help us understand how we can position ourselves alongside the exposure that the market maker has. So I'm going to be talking about that very, very shortly. But what's happening in the markets right now, which is explaining why NASDAQ's taking a little bit of a tumble down, is because the earnings for Microsoft and Meta have kind of hit investors with the idea that, maybe you've been spending a lot of money. To be precise, it's around $78 billion worth of expenditure on AI. And some investors are like, well, hold on a second. Meta's earning per share came in at $1.04 roughly, when the expectation was $3.10, something like that. That is a big smack across the face. Now, Zuckerberg has had a history of investing money and not getting a return from it in his previous endeavors with MetaWorld and what have you. So investors are like, hold on a second, are we in the same story? Microsoft kind of did all right, but they didn't meet the expectations that investors had of them. Now, it's obviously investors are like, okay, you're going into partnerships with people, but you're not making the money. I mean, we're not hitting the expectations that we wanted, which is explaining why probably the NASDAQ is taking a little bit of a pullback. On top of that, you've got the Federal Reserve coming out with flavor saying, your interest rate that you want happening in December, well, there's nothing final about it. There's no conclusion on the indefinite cut that we are looking for in December. So what we're going to do, guys, we're going to break it all down for you, get you in on what you need to know. We do have a big options expiry happening tomorrow to the sum of around 13 billion for cryptocurrency. So I'm going to help you understand the market maker's positioning and how you can position yourself to avoid getting smacked across the face. That's the truth of it all. All right. So let's get with the program, ladies and gentlemen. Mad love and respect. Yeah, the market is killing a lot of people, but it's all about how you react to it. So here we go. Stocks fall amid trade, tech and Fed crosswinds. It's interesting. Now, the article goes on to talk about where we are. Trump and China, they are calling for a truce on trade, so don't need to worry about anything for a little while, okay? China's committing to buying up the soya beans, and then we don't have to worry about anything for a whole year in principle. So the market has already priced that in. It's no longer really the big interest, and you know why we know that? Is because of this. Right now, you are seeing the bets for the rate cut in December, and it's dropped from 91% down to 72%. That's no good. We're seeing investors betting on the idea of a 27% chance that they're going to keep the rates on hold in December. Why? Because Jerome Powell pretty much said it. We don't know where we are with the labor market, even though we make the assumption that we are seeing a softening in the labor market. We don't know where we are with inflation and how long it's going to be sticky for. We've got the problem of stagflation, which leads us over to the story of gold. Now, even though gold has taken a bit of a tumble to the downside, the prospectus is that they still believe that gold is going to move higher. Now, when we go into gold's price action, just for a split second, where are we at with gold? Where's my chart here with gold? Okay, then. So when we look at gold itself, you can see it's consolidating inside of this range. And logic would say that when the Fed says we're going to cut, gold's price technically should be marking higher. That's not what we're getting right now. It's consolidating sideways. And in my opinion, when we go to the higher timeframes on gold, we have had so much in terms of inflows. I mean, the article does go on to say that we have had around gold demand reach 1,313 tons, which is to sum of around $146 billion between July and September. And that's the highest ever recorded. And the World Gold Council says that there is still demand going on for gold. Why? Well, we're going into stagflation, so investors effectively want to put their money elsewhere rather than holding on to dollar. But at the same time, with the rate cuts with the expectation of rate cuts coming into play, that's naturally going to end up leading gold to climb higher, okay? So when you look at gold's price on the higher time frames, mark my words, we're coming back up to these vectors. Simple. Okay, we're coming back up to that 4,200, 4,300, 4,400 region. So if gold starts to stabilize itself at the 50 EMA, which is the first test of the 50 EMA since August 2022, 22nd, then we could say, okay, then if gold's going to consolidate here and the demand's going to step in, discount traders going to step in, but also it all depends on hedge traders, how they are positioning themselves on the future events that could be coming into play. So the next event realistically is the expectation of rate cuts. If we go into December and gold does not get the rate cut that it's expecting, then of course gold's price is going to come down again, and that would equally lead investors to sit inside of the dollar and generate a yield. Speaking of the yields themselves, guys, we go over to the 4 hour and we have a look at the 10-year, 2-year, and the 5-year. 2-year yield is currently up at 0.9%. Look at that, and it's going up aggressively, which shows you that investors are not piling into the US bond market. That's a problem. 5-year yield shooting up, the 10-year yield shooting up, 30-year yield shooting up. And when you see these yields going up, then it's going to be a problem for the stock market. Speaking of which, NASDAQ taking a 0.61% negative drawdown. And it's looking, I mean, come on, man. Give us a bit of a retrace at least. You know, give us an opportunity for the dip buyers to step in, because it was good news yesterday for Microsoft, but it wasn't. The only thing that's won today, ladies and gentlemen, is Google. Google is currently up nearly 7%, going into an all-time high of nearly $300 a share. That is absolutely wild, and it was all off the back of the idea of Google Cloud Services showing big demand. And then we're going into Meta right now. Meta is taking a bit of a tumble. It's currently trading down at $675 a share from the close of this last night at $752. So that is a big drop, man. The $100 drop in price. That is absolutely wild. Nvidia still doing its thing, but it's gapping down and recovering the gap right there. But going into the NASDAQ itself, we can see that the dollar dominance is starting to climb up. It's going up. And I said that don't sleep on the dollar. It's going back into vector candle recovery. And that is exactly what's going on, because investors are taking risk off the table and going into the safe haven of the dollar, because the yields on the dollar are going to be higher for what? Longer. So with the yields going up, that means the expectation of interest rates is going to stay higher for longer, which will equally then have an impact on this betting here, which means that if investors think that the rates are going to be higher for longer, then they're going to be skewed to the idea that interest rates are going to stay between 4 and 4.25%. So where does that put Mr. Bitcoin itself? Well, check this out. Says here in this article, market stumbles on Fed caution as options expiry looms. Scroll all the way down to this point and it starts to dive into something interesting. It says here, Friday's $13 billion options expiry is adding more pressure to crypto prices. According to Deribit data, market makers are exposed to negative gamma at strike prices between 100 and 111,000. Now, this is where we need to pay attention. Going over into Bitcoin's price right now. We have got 111,000 here, and we've got the 100K region right here. So what's happened, ladies and gentlemen, is simple. The market maker has effectively sold options to its clients, okay? But it's now currently in gamma negative, okay? Now, the goal of the market maker is to hedge himself. And he has to maintain what is called delta neutral. So when price moves, he's going to be losing delta, okay? So what points in the chart is the market maker going to behave in a certain way to protect himself? Now, the 111,000 says that if Bitcoin can get back up above 111,000, it will force the market maker to start buying the underlying, which effectively is a squeeze until he gets to the point of delta neutral. However, if weakness is maintained, he will continue to sell into the weakness, which is where you ride the momentum lower. And that lower momentum would effectively put Bitcoin at and around the 100,000. But if it clips the 100,000, the market maker, in sense of options, will probably get aggressive and sell more options so that he can avoid being in the negative gamma and maintain delta neutral, okay? Now, that might sound like an absolute dog show to you, but the best way for it is this. Bitcoin has to stay between 100 and 111,000. If it claims the 111, then there's a good trajectory that Bitcoin's going to continue higher, because the market maker will then say, okay, we've sold a few options. We now need to start covering ourselves, get back on that delta, get to delta neutral, and start pushing price up and effectively buying the underlying, which is Bitcoin, okay? But if it goes to 100K, the market maker will be forced to keep selling, okay? The happy medium is between this price range, all right? Now, what I'm saying to you is that if you do see Bitcoin come down, any rallies back up and you're buying it, any rallies back up, take some profits. But you're limiting yourself because 111, 100,000, it's only $11,000 price range. For you to really make a good return on Bitcoin, you do need about a 10K move in Bitcoin. Let's be honest now, all right? But it all depends on your exposure. Some people will use leverage and they will effectively say, okay, if Bitcoin drops all the way down to 103,000, I'm going to see if Bitcoin can try and do a little bit reversal from there purely off price action principles, which is where the market maker will effectively sell into the weakness, but equally he will then start to pressurize price to come back up to short some, cover some shorts on any existing profits. Because you've got to remember, when market maker is in positions, he doesn't care about price. He doesn't. All he cares about is where the exposure sits. How soon can he get into delta neutral? And how long can he sustain being negative gamma? Okay. And if he has to do a certain type of action, which means either buying the underlying, which means buying Bitcoin as it's going up, or selling Bitcoin as it's going down, that's going to help him get to a point of delta neutral. Okay. Now, this is the major question. Okay. Is Bitcoin being primed to go beyond 100K? Can it hit 100K and then grab a ton of interest and then make a reversal? Well, let's just look at the order flow right now for a second. Here are the liquidations for Bitcoin. So just zoom out. And we do have quite a bit of liquidations coming into. Zoom up, man. Come on. We've got a couple of liquidation points down here on the 3-day chart for Bitcoin. Excuse me. There we go. So yeah, you've got some liquidations currently sat below the 108,000. We've got a lot of short liquidations coming into play. So that's all good for those guys. And then, of course, if we go into the ETF, well, forget the ETF for a split second. I just want to go to the order flow on Bitcoin, just understand where we are. Okay, then. So I said this morning to the Platinum members, all right? Now we're starting to see some interest coming into play. But what we have had over the last couple of days is very minimal volume coming in terms of the bid side. Now, if you look here, yesterday's price action, we saw Bitcoin get swept lower and come back up. But look at these orders. There's an order here that showed it was initially for $1 million, but they traded 10.32 million at 108,500. Those were for bids. But those bids have effectively been recovered now, and they've made profits because they sold as they marked price up again. But what I started to understand inside, here we go, you got another one, 1.28 million, and they traded 10.6 million. What does this tell me? Well, it effectively says to me that there are participants watching price. And it means that as they see price going down, it's grabbing interest because the initial amount was 1.28 million as an order. But when it triggered that price point, happened to be at 109,500, it activated someone to step in and buy Bitcoin on bid at for the sum of around 10.6 million. So what that's saying is someone's just transferred it to Bybit wallet. Okay, that's good. Maybe not. But what I'm saying to you is this: as Bitcoin's price comes down, it's grabbing investors' attention. Okay. Now, because of the expectation of interest rates maybe not getting cut, we might see a wave of Bitcoin movement to the downside. But we know that market makers are playing this range. So what I'm saying to you is this: if you're going to start buying Bitcoin, just be mindful that if you buy it and it drops, sell it as it rises, okay? If you buy it as it drops, sell it as it rises. Because if you were to do the same range and look at it from all the way over here, for example, and just split it across here, for example, right now, all right? Let's assume the following structure so you can visually see what I'm talking about, okay? Here's an example just inside of this range, just to make it easier for you, okay? You see how Bitcoin's come back down beyond the 102,000 zone. If you were buying as it was going down, you would have then seen a return back up, okay? Hypothetically, if you were to just buy at the 104,000 region, you believed it was going to go higher, okay? You would have captured 104 all the way up towards 115. So that is a 10 grand move in Bitcoin. Awesome. You took your profits. But if you held on to your Bitcoin, you would have been back to square one. And then it would have moved back up again and given you the same return. And you held on to it, you would have been backing off again to square one. And then it moved up again, put you in a better position, and you held on to it, you're back at square one. This is why I say to you that market makers, this is what they're doing in this range. Now, the next range is between 111 and 100,000, meaning if Bitcoin can get above 111, they will be forced to buy the option and short cover. And that will then send prices higher on Bitcoin and squeeze the participants out to effectively hit this recovery of the vectors or the exposure, okay, or the imbalance. If it goes beyond, there's that bloody thing again. If it goes, I don't know what it is. There's something running on my computer and it does it every time. I don't know if you could hear that siren. So actually, no, I doubt you could have heard it anyway. So yeah, but if Bitcoin does break the 100K mark, okay, this is where we know market makers will be selling the options even more. Okay, so it's going to be a very critical point if they do mark Bitcoin towards this price point. So I would watch. Don't buy at 100K. Let them hit 100K, because the reversal from that point, because we know full well Bitcoin can easily do that. Don't say to me it can't, because it can easily clip 100K. And looking at where we are right now with big tech showing the idea that they might not be doing too great on the earnings, well, investors are going to be like, hold on a second. Hold on. NASDAQ has been trading at these significant levels. Even if NASDAQ was to drop down to 24,900, that is still a good pullback. That is awesome. And that was only last week's range. Okay? Still good. But what would a move on the NASDAQ from that high all the way down to here? That's only a 6% drop. Do you understand what that would do to Bitcoin? It would rip it apart. And Bitcoin would easily clear the 100K mark. Easily. But we would have to see investors stepping into crypto as Bitcoin drops down to sustain the balance of it. Because the balance on the ETF is still going up. It's going up. We're at 808, I believe it is. Where is it? Hold on. Oh, my days. That is rough. That hurts. 806. Right? 806. Looking at the flows themselves. 3 hours ago. Well, we've, not really done too much. Inflows. Outflows. Yeah, they're just not really doing anything. They've just sold 48 Ethereum, which is not really great. And 194 Bitcoin's been moved to Prime Deposit, Coinbase. We're starting to see some ETFs getting offloaded. But looking at the price action of Bitcoin, just be very mindful. Try and take advantage of start watching what? Nah, man. Will the dollar strength trigger any sympathy in Circle, or am I overthinking the correlation? Not yet. Well, look, listen. It's going to be good news and sort of bad news when it comes to this stablecoin story. MasterCard stepping in now. So now you've got major players wanting to play the game of stablecoins. And a household name is going to be more encouraging for investors than any new company. That means Circle. That's the truth of it. Okay? So you got to be very cautious with it. But stablecoins, this is good news for stablecoins. So everyone in stablecoins is going to win. Okay? That's my logic, ladies and gentlemen. That's what my belief is on that. Saw this BS this morning. CME XRP futures explode past 3 billion open interest. The bulls stand tall at $2.55. Let's go and have a look at that. XRP is going down to 1.6, ladies and gentlemen. There's no two ways about it. I don't care what anyone says. Your bulls can stand full of bullshit. Rising institutional appetite. What appetite? They treat XRP like a snack. Take a bite of it. Don't like it? Spit it out. Never have that snack again. That's exactly what that means. That's what institutional appetite means. We'll have a little stab at it. If it's got a sour taste, get rid. No questions asked. Anyway, it's a stupid asset. Sell it. Get rid of it. See, I do the opposite of shilling. I want you to sell it so I can buy more of it. I'm joking. I'm not. But anyways. Any questions? What's up? Cypher, Rops, man. Any questions, ladies and gentlemen? Tina, what's your thoughts about opinion on all the lithium? My thoughts about lithium. Well, okay, yeah, lithium is a good shout. What you want to really do is investigate the lithium mines, find out who's mining and extracting the lithium. That's really where you want to be, all right? And then it goes down to, so like for example, with oil, All right. You got oil refinery companies and exploration companies, and then you get the manufacturers who distribute it out and what have you. So there are different sectors in oil and drilling as well. Okay. So that's another sector. So whoever finds oil, yay, we found oil, they make a ton of money off what they sell it for. And then the company that refines it and then puts it over into the market, they make a bit of money. And the guys that have it to sell into the market, they also make a bit of money, but it all starts from the drilling and the refining of oil. That's where the big money is made, in my opinion. Okay. I see we will visit 99K on 91, 90, 91 if it broke down more. Maybe. But you know, crypto bros, where they invested, and it's not Bitcoin. Oh, okay. Tino, when Battlefield 6 stream? Battlefield 6? Bro, I'm sick of looking charts, let alone computer. Thoughts about FOMC announcement of the rate cut phase and possible QE at the largest bubble in mutual funds needing to find hedge. So my expectation is this, right? Given that the Federal Reserve hasn't given us the conviction that they do want to cut the rates in December, you've got stagflation, ladies and gentlemen, all right? And the problem that we've got now is, if big tech, this is the issue we've got, Microsoft and Meta not meeting to the expectations of investors, okay, is going to be a bit of a problem. They have every reason to get rid of that stock now because it's at all-time highs, okay? This is where investors get caught out. Let me show you. Let's say, right? Sorry, I keep putting my hand on my head, but I've got a really bad headache. Let's say you're an investor in Microsoft, okay? And you bought Microsoft at $461, okay? And you saw the earnings announcement and it hasn't really satisfied you. What are you going to do? Well, you're just only a few percent away from your all-time highs, all right? I may as well get rid of the stock. I may as well get rid of it now because it's at a high point anyway. And you get rid of it, you sell it, because you just found out that it's not really great across the board with the earnings. You didn't meet your expectations. It then pulls back down to the same zone that you bought it from. Then you're going to ask yourself a different question. What's going on across the board? Where are we at with interest rates? What's going on with Microsoft? Any new partnerships as such? Then you'll be asking the same question again at this level, which will then coerce you into buying it again, okay? The same thing for Google. There's every reason for investors to sell Google stock right now. There is a lot of people selling Google stock because of how much it's climbing up. Earnings per share are great. It's wonderful, stellar. But even if it were to pull back down to $250, $35 a share, that's still all good. Even if it were to come back down to $202 a share, that is still good. So in other words, even if it were to drop from this high all the way down and drop 30%, ladies and gentlemen, that is still good. It will encourage the dip buyers, because then we will no longer have the problem of what? Overvalued stocks. It would have lost 30% in value. Happy days. Let's take some discounts. Buy it up. Okay? Nvidia, same story. This looks like a climatic run, in my opinion. And even if it were to come down to $172, still a good spot to be in. So investors have every reason to sell, okay? And every time they get a bit of information to justify the reason to sell, they have every reason to sell at these levels. It's when there's a justification to sell and they've bought here, okay? And the news announcements is here, okay? Which has effectively then sent price all the way down, okay? So now investors are holding onto the bag and it's losing, which is going to then force them to retain that. And then lots of other people will be in the same logic. And you'll be waiting for the idea of people to buy in at the discount so that you can retain your position. But we're in a great position for people to react positively to bad news, which means selling the asset at the highest level. They've got no reason to hold on, okay, other than sheer greed. And that's the fact. See what NASDAQ does now. The market is open. All right. Just quickly dive into it. Zoom in. Oh, market's not even open yet. Sorry. My head is fried. I am so sorry. Anyways, anything else, ladies and gentlemen? What if sentiment in the market is good, but the structure shows bias to the downside? How would you take the trade? You just got to be careful with the structure, all right? Because there is nothing technical other than the fact that the trend is up, okay? But the problem that we've got is this. A lot of traders are looking at it from a technical view, but they're not focusing on the sentiment, okay? Which is why every drop to the downside is met with a, go short, the market's crashing, and then it equally then comes back up again because they are riding the sentiment. Now sentiment's starting to change. Microsoft is making investors think twice. Meta is making investors think twice. The FOMC is making investors think twice. And some of you are going to turn around and be like, oh, this guy is pushing FUD. I'm stating the facts that we've been given over the last 24 hours. If you don't believe that no one's really happy with Meta, then explain to me why Meta right now is trading negative 7%. And it's down from $752 to $674. That's not FUD. That's fact. So we work on fact, not on the hopes. Do you know how many times I'm seeing people talking about this 4-year cycle with Bitcoin? Where's the rainbow chart? I want to see that rainbow chart. What's it saying? Hyper discount. Buy. Look, I'm not here to slate Bitcoin. I'm here to get you to think outside of the box. Your Bitcoin is Wall Street's bitch. And until you accept that, you are then forever going to be holding on to a bag that's going to stress you out. So then change the way you perceive Bitcoin. All right? When people write all these articles on the existence of Bitcoin and what it can do for the future, you had that in 2021. You had that. But then you invited Wall Street to violate that. Because at the end of the day, you're in it for the money, not for the tech. And don't bullshit me with that. You are all in it for the money because you're all call for prices. You don't call for adoption. You don't call for the way Bitcoin can solve a problem. Why aren't you all going over to the Federal Reserve with your banners saying, invest in Bitcoin, help the people do this? Well, no, because everyone's just greedy. They just want the money, not the tech, the money. And those of you that are in it for the tech wouldn't even give a damn about what Bitcoin's price is. You wouldn't. Simple as. Sorry. Rant is over. Ladies and gentlemen, mad love and respect. I love you all. Please trade safely. And I'll be tuning into you all later.